Scott Groves here with another mortgage mystery. When do you start giving the bank money, or AKA, when do you make your first mortgage payment? Well, there's something kind of interesting here that all mortgage payments in the entire country with every bank are due on the first of the month. So the payment schedule goes something like this. You own the house. On the first of the month, you have a payment due for the interest that accumulated in arrears for the previous month that you owned the house, and then you pay your mortgage on the first. That covers your interest for the previous month, and normally, if you have a 30-year fixed mortgage like 99% of the country does, you pay a percentage of your principal down on the mortgage loan. So your mortgage payment is due on the first, late on the 15th, meaning if you make a payment after the 15th of the month, there's usually some type of penalty, usually somewhere around 3% of the payment amount, or $100 or $25. So if you make your payment after the 25th, you're going to have a late payment charge, but you're not going to be reported late to credit. And then if you go past 30 days, you will have a negative mark on your credit if you don't make your payment within the 30 days of that month. So the question remains, when you buy a house, when is your first payment due? Well, your first payment is due on the first of the month following an entire month of ownership. So let's say, for example, you close the escrow or you close on the contract for your house on January 17th. Your first mortgage payment will not be due until March 1st. So when you make that March 1st payment, you're actually paying for all the interest that accumulated in the month of February, plus some of your principal that's going to pay down the mortgage. So then people will tell me like, oh, well, if I close at the beginning of the month, I just get to live in the house for a full month. Let's say, for example, you close on January 2nd. I get to live in the house all of January for free, and then the payment accumulates during February, and my first payment isn't due till March 1st. Of course, it doesn't work that way because you're never going to get over on the bank. What happens when you close on a purchase transaction, whether it's on the 2nd of January, the 17th of January, whatever the case may be, the lender is going to collect up front and get paid the prorated interest in this hypothetical from January 17th to January 31st. You're going to pay that interest up front through the closing process. Then your interest will start accumulating during the month of February. You'll make your March 1st payment. So you're never going to get away with anything or get any free money from the bank. But if you're trying to set up like, hey, when do I need to, not have a rental payment and then a mortgage payment at the same time? How do I time this? How do I know when I'm moving out and when kind of like expenses are due? Remember, your mortgage payment is due on the first of the month after a full month of home ownership on a new mortgage. And then going forward, your mortgage will always be due on the first of the month, late, meaning it has a late charge if you pay after the 15th, and negatively reported to credit if you pay after the 30th. So, Scott Groves with another mortgage mystery. If you've got any questions about a mortgage, a refinance, a purchase loan, we're here to help. Use the contact information below to get in touch with us. Shoot us an email, a text, get on our calendar. Our Calendly link is down there, so you can put some time directly on our calendar with our team. And if you're enjoying these videos, if they're worthwhile, if you watch here to the end, do me a favor, hit the subscribe button, click the like button, leave a comment, just so that we know what we're doing is working. Thanks so much.